So today I have 3 stocks ideas you must know today. What we're going to use? Exactly. We're going to use the Hawkeye Scanner. Welcome back, everyone. This is Coach JR, and on behalf of the Hawkeye Traders team, I'm going to show you exactly what is happening today with 3 potential ideas that you cannot afford to miss, all right? So first, let me just minimize myself. There you go, and let's work on the charts. I'd like to go over what's happening so far this month with the indexes. To do that, I'm going to take a look at the most, probably 2 of the most well-known ETFs. That will be SPY, SPY, monthly chart, and the Qs, QQQ. Well, I'm going to change these also to the monthly. Now, let's take a look so far what's happening. It's not a big drop. A lot of people were talking about the Jewish festivities, and everyone is expecting that someone's going to buy the dip. It's not exactly what it has to happen, but we don't have to also expect that we're going to have a crash. They tend to always provide you with some data from the past to scare you, and that's fine. But if you're a trader, if you're an investor, first, as a trader, you always need to manage your position. You always need to have your stop losses in place, or at least you need to know exactly how much you're willing to lose if things don't go well. So there's nothing to do if there's a festivity, a Jewish celebration, or if there's a market crash. You always have to be ready, period. No excuses, all right? You don't need data from the past to just position yourself, okay? Second, if you're an investor, you're always happy. I repeat, you're always happy to have a pullback, because in a bullish market, because like it or not, we are in the first year of the bull market, then remember, because we're playing liquidity, we have the Federal Reserve, you're praying to have an opportunity to load the boat in those stocks that you love the most. So there's nothing to be afraid of. Actually, we all should be preparing. Now, looking at the SPY, we have only a minus 0.81%. That's nothing. That's absolutely nothing, looking from a macro perspective of these charts. Although that's the case, in a bull market, what you want to do as a preference, you want to buy strength. But how do you get there? That's the question. So today I'm here to answer it. It's very simple. You want to be armed. You want to have all the tools that Hawkeye Traders provides, because our indicators will give you that idea, will give you that edge. And today, as usual, I want to share with you the ideas I get directly from the Hawkeye Scanner. So basically, at the end of every day, I'm getting a list of stocks that are in buy mode. They are either going long because of the trend, or second, they're coming from the roadkill, this beautiful tool here in the middle that gives me those green, red dots. Green, mostly in a bull market, I want to be a buyer. And at the same time, when I'm sharing this with all of you, what I want to do is take a look to how to maximize it. And that will be using options, okay? I'm just going to be playing naked call options. That means I'm just buying the options. But I'm looking also to include some time to give the stock the opportunity to start working its way higher. So let's start with the first idea I have for everyone today. The ticker will be AMAT, that's Applied Materials. And one of the best practices that you have to do as a trader and investor is to just have a clear idea what's the trend. In this case, the trend, we define this, we'll take a look at the daily chart. This is what I'm setting up. And to the left, you want to take a look at the weekly chart and see what is happening there. So I'm using TradingView. I know there's some Hawkeye traders that use TradeStation. That's fine. All right. Now, this is what we have. Look at it. Let me just move here. Let's take a look at the trend. So part of the best practices is the duality. You have to look at multiple time frames. The long-term time frame, in this case to the left, weekly, it's saying, hey, we're in a bull market, and pullbacks must be considered as buying opportunities. So how as a trader you define that? And I repeat this on every video, and I will do the same every single time. We have to keep these atomic habits. You need to have Hawkeye Trend Plus stops. That will allow you to know exactly levels where you have the opportunity to either buy the stock for the first time, or the most important question that we get from new traders, newcomers, how do I know that I have to stay in the trend. That's what you want to do. You want to squeeze that trend up and make the most of it. Now, so look, we have this big pullback back in May, but at the same time, it never break down our Hawkeye trend plus stops. So that was a buying opportunity at $118. What we have now is a continuation. We have another pullback back by the middle of August, and now we have this continuation. What a beautiful continuation. What we're expecting then, it's a little bit of what I call the price rotation. This is when you're getting to a point that the stock is ready to break the previous high. That high was back on April at very close to $145.35. Once we have that, then we have a continuation. And if you measure that continuation, let me just give you an idea. This is the breakout zone. You measure the range. We have about $31. And basically, as you start allowing the stock to discover, this is what we call price discovery. Hey, listen, it's pretty basic. We're going to have at least a $30 breakout. And that will give Applied Materials another bullish leg. And you want to be in. We're talking another, probably an extra 21% to the upside. Now, it looks beautiful, and you're saying to yourself, hey, every share so far cost me $140. That means I have to put that much money, and I probably have $10,000, or I have $50,000. Some of you have $1,000. Remember that each one of you will be a universe. You have your own financial situation, so trade and invest based on that. But you're looking at a 20% cash. That means no margin, all right? So if that's the case, you're wondering, okay, so you're telling me Hawkeye trend plus stops allow me to be in. I'm in the trend, but I'm looking for 20%. And I understand we're in a bull market and we're buying strength. So how do I maximize that? That's why I'm here. That's why I'm your coach. We're looking then to buy options. So as usual, most of you, I do look for quote media to get a sense of what's happening in the U.S. options market. And I'm going to share with you how I do this. We're always going to look for conservative, aggressive, and we can always take a look at a weekly play. All right? That's what we want to do. So you go in with the ticker, AMAT. Now, if it's bullish and I'm expecting something, I can play a weekly. How do I do that? Well, this week will be Friday. That will be tomorrow, the 17th. So I'm going to look for next week. The weekly expiration will be September 24. Now, we can do this in a lot of ways. The stock is trading at $141. Judging by this, let's say that it pops another dollar. That will take me to 142. But also you can see that there's some open interest. There's some volume concentration on the 145. So I can speculate with that. And right now the premium is $1.08. So you can probably be paying, let's see if we have the ask information. You will be paying, it's not here, but probably let's say maybe 20, 30 cents more. The spread, it may be wide. So you have to consider that. So this will be my first idea. The weekly for next week, thinking that it will pop up, it will move more. The contract low in this case is only 30 cents. The high, $6. So there's something to happen, and we have that push. Remember, it's just speculation. We have a push next week on Applied Materials. Then we're looking for a nice 100 to 200%. My suggestion, remember, as soon as you get a field, just set your sell limit. So if I get fill at 110, 120, I want at least to have a sell at 240, 220, depending on your case. Remember, no one is going to be faster than the market. So when you're trading options and you have an idea what you want to do, then just sell limit. Place your sell limit right away. In options, I'm starting a new dynamic model. In options, if you're playing the weekly, you want to have at least a 60% haircut. That's right, 60% haircut. And I will explain more how to do this, but you need to manage your money. That's very important. So that will be my weekly call. That's one. Now, let's take a look at what I will say if I want to give more time. Okay, if I want to have more time, looking for October, November. So again, you just go with the ticker. And let's give our trade, our position, more time to play with. That doesn't mean I'm expecting a reversal in the markets, but it gives plenty time for the stock to start moving higher, that next bullish leg, okay? So we're going to take a look at what else is available. They have November. I'm going to go with November. That's November 19. That's the monthly expiration, all right? And then I'm going to look for what seems to be attractive. I can always look at accumulation. There's some place at 165. I can go up here where you see strikes, choose all. And yeah, the nice accumulation, it's in between 165, 170 call. The 180, it seems pretty far away. I can also play that, see what it looks like. But I'm going to look for certainty. I'm going to look for certainty. I'm going to look for volume concentration. So let me go with 165 call, November 19 on AMAT, Applied Materials. Now let's take a look at what's happening here. First, the contract low, it's 65 cents. The high was $5.55. We're at $1.45. That means that we're doubled. We're 100% from the low. I can live with that. Delta, it's okay. There's nothing else to see there. Implied volatility, only 33%. So that's not exaggerated. Anything above, when it looks for implied volatility, everything that you look above 100, it's fire. Think about implied volatility as like you're going in a train, okay? You're going in a train and you have actually to jump out of the train while still moving. If it's moving too fast, God bless you, you're probably going to die, okay? But in the case of options, that means that the underlying asset has to move pretty fast to compensate. That's at least how I see implied volatility in this very basic way. So I want implied volatility, especially with these big stocks that are triple digit, to be under 50%. And this 33%, that's fine for us. The low is 108. The low so far yesterday for the contract was 108. Contract low itself, 65. I mentioned we're good with that. And the open interest so far, we have 6,393 contracts. That means that maybe someone knows something. This is not exactly my SDF, statistical disruptive flow, that we use to pinpoint these explosive moves in the options markets, but it's a way to gauge what's happening with a particular contract and where investors and traders are looking at this particular stock, in this case, Applied Materials. So this will be my second idea for you all. 165, remember the stock right now is trading at 141. If we expect that to happen by November, 165 at least, that will be a 17% move. Remember, very important. My idea is not that we have to be in the money, but at least I would like step by step to see the stock move higher from today, September 16, all the way to before November. That will give us an idea. The other tool I want to share with you, it's the long position, okay? The long calculator. It's free. You can use it all the time to play with the ideas you have. So I'm going to end this one with this particular case, and then I'm just going to jump and discuss the other two stocks that I have for you today. Let's see if I can get Applied Materials here. Okay, it's loading. There you go. And let's talk about that particular trade. I'm going to go with two trades for this video. The 165, you can get it for $1.45 on the ask. Let's take 10 contracts, for example. Remember, trade based on your financial situation, okay? We have, that will be almost $1,500 on that scale. Let's see if we get to 160 to 170. That's pretty good if that were to happen, okay? We need something to happen between now and at least we can look for 200%. So at least very conservative, I'm looking to double my money with this particular trade idea, at least before November. So I will say I will look to double my money. And this is just basic scenario. This is a very conservative. I'm looking to double my money. By October, if we have the stock trading at $162, you're looking for 157%. So if you buy at 145, then you will be selling your contracts at $3.73 and you will be taking home, if you invest almost $1,500, you will be taking home $2,280. Again, if the stock is trading roughly, this is just a basic math, all right, just a guidance. If the stock is trading by October 30th at $162 per share, then we're selling our position at $3.73. That will give us about 157% in profits, turning $1,500 into a $2,280 profit. Okay, so that's what I have on Applied Materials. Now, another stock that I want to talk to you about, although the indices are doing little, is Texas Instrument. As usual, we're going to take a look at it with the Hawkeye Traders tools. And the reason why I'm looking at this particular company is not because I've been tracking it. It's because on daily basis, thanks to Hawkeye Scanner, I get a list of companies that are in bullish mode using trend, using roadkill. And that makes my life very easy because I just have to wait at the end of the day to get this report, and then I look at these companies and just start my process. Remember, we want to look at them from two angles. We need to have two views, the long-term perspective and then the short-term perspective. Long-term, we can see in the weekly, we have the heat map. This at the bottom of my screen. Heat map is telling me, hey, we are in the bullish trend. Nothing has changed. If I look at the short-term view, the daily chart is the same, but look at this beautiful entry. You see the green dot there? That's roadkill telling you either we have a change in the structure of the volume or the trend. So although it looks like it was the market based on candles, and this is where technical analysis can get very tricky, I prefer to let myself be guided by volume. Volume plus trend. That's exactly what you need to know, because you would probably look at this candle, looks like a doji, and you see, you hear my voice, looks like a doji. Hey, looks like, what is that? No, professional, those that want to make up to 10 to 20,000 in a single day, you do need to have these tools. They will allow you, these tools will allow you to understand really what is happening and remove the guessing, looks like, and the whole emotional factor. So I stay in the trend. Roadkill is telling me I have to be a buyer. The long-term trend is bullish. Hawkeye trends plus stops. It's beautiful. Tell me, hey, there's a dip. You have a dip within the bullish trend. You have the opportunity to buy. So if I'm looking for the next opportunity, I want to play Texas Instrument. Right now, $197. These particular stocks, they love the round figures, so I expect we're going to make it move to 200. And the same way I help you with price rotation, let me do it for Texas Instrument. If we're about to break that previous high from April, the first week of April, then we're looking for a duplication based on price rotation. You can take this area, that would be $22, or you can take this previous low, that was about 36. So you can have a conservative and a little bit more aggressive view once we start breaking higher. And that will be our next bullish leg for Texas Instrument. So I'm going to be more aggressive on this one. And I'm going to take 36 points to the upside. That is giving me a very basic, I can say it's conservative, but let me be more aggressive with this one. We're talking another 18% to the upside. And you're thinking, okay, it's already trading at $197, $200 per share. How higher may it go? That's your answer. So Hawkeye Traders is giving me the support, the consistency to stay in the trend. But with price rotation, I can start playing the unknown. And based on with this information and everything that I'm getting for Hawkeye Traders, Hawkeye Trend Plus stops, then I have an idea how far this stock will go up if it continues higher. All right? And the final stock, just to finish this video for today, I'm going to talk, believe it or not, I'm going to talk about McDonald's. And remember, it's not about your feelings. It's not about what you think. It's about playing the market that we have in front of us. That's what it is. Long term, we're definitely in a bullish trend. Look at what we have on the weekly chart. And I'm going to go with the short-term view, MCD, McDonald's Corporation. There you go. And look at this. Beautiful pullback. Where? Exactly. Hawkeye trends plus stops. That's where is the money. Following our technical indicators, we remove the emotions. You don't have to guess anything. Looking at what is happening on the daily chart, same story. And we have a beautiful entry from Roadkill letting us know we ought to be in this stock. And now the position, we probably are setting up ourselves to challenge the previous high back on the last week of July 27, at $246. If the market is flat, if the market is trending a little bit lower within a bull trend, you are looking to buy strength. And that's what we have with these three stocks. First one, remember, Applied Materials. Second, Texas Instrument. And finally, like it or not, McDonald's. This is where the money is flowing, and we have to follow the smart money. Hawkeye Scanner let us all know every day what stocks are in buy mode. And if you're looking to be a short seller as well, you're looking to buy put options, it has a report that will give you that. So every week I'm going to come with ideas that you want to play, ideas and how to develop yourself as a better trader and a better investor. I hope this video gives you all the necessary tools to succeed in your venture. And remember, go to the description of this video. You cannot miss, you cannot trade without this tool. Without Roadkill, without the Hawkeye Scanner, it will be like be a blind man trying to walk into a forest full of wolves and animals that are just trying to eat you. So you need some guidance. So click on the link and go ahead and get access to Hawkeye Traders tools. And also, I know you want to know more about me. You want to follow how I pick these options. So there's a second link. Usually we only give you a link, but we're going to give you a second link with a broadcast. This broadcast, it's free. I don't buy it. So go ahead, click on that one and the second one as well, and learn more about my story and how I became a better trader, how I became a better investor, and why I became a coach. Because I truly believe the U.S. stock market, not anything else, not even the German markets, the U.S. stock market is, in fact, as we all know, the single most powerful tool to create wealth in our generation. So I thank you for watching, guys, and on behalf of the Hawkeye Traders team, thank you so much and enjoy your weekend. Ciao.